Today we are going to talk about a topic that is near and dear to me, and that's why I've devoted 2 videos to this. Number one is there's a lot of HUD foreclosures right now, so all the FHA foreclosures that are available, and I'm going to give you some tips on what to look out for when buying a HUD foreclosure, and if I could be of any assistance, I'd love to help you out. Hello, this is David Zai with the Zai Mortgage Team. So, number one, when you are bidding on a HUD foreclosed home, round one is typically going to be for primary residence buyers only, okay? So investors, second home buyers, it's not available, okay? That's tip one. Tip two is that if you are buying it as your primary residence and the home is being offered eligible for FHA financing, here are some of the things to really look out for. Is number one, an existing appraisal is probably already done on the property. And with that being said, unless it is expired, you're going to have to use that appraisal. And then the sales price is typically based on that appraisal. So if you decide that you wanted to get into a bidding war and the price is over the appraised value, guess what? You're going to be stuck with that bill and you're going to have to pay the difference over. So make sure if you're going through that process, you are constantly communicating with your lender, and you'll understand by the end of this with all of my tips that you constantly need to be communicating with your lender, because ultimately what happens on these loans is that you have to be married, because there's a lot of ups and downs when buying a HUD foreclosed property. Tip number 3. HUD does not automatically provide title insurance on the properties, okay? A lot of times they're taken out as special warranty deeds or something like that. So you have to make sure that when the lender is disclosing your package to you, which is your loan estimate with all the fees and everything, that all the additional expenses are added into that loan estimate. Because we don't want you to be surprised, once again, okay? If HUD does not pay for that, then the title insurance does not convey. That means you as the buyer may have to cover it, or if your lender knows about it and they didn't put it on there, hopefully they'll stand up and do the right thing and cover it. So only if HUD agrees to pay for the closing costs and the prepaids and the insurance could it be on the HUD's bill, okay? So that's tip number 3. Tip number 4, the lender documents. That means your closing package. When you're going through the loan process, let's say you schedule the closing for 30 days, your closing package has to be with HUD 10 days prior to the closing date in pretty much most of the states out there, okay? It has to be approved by the lender, who you're going through, as well as HUD, in order to, accommodate the closing. And once again, they require 10 days for them to review the package and have it there. So basically you have to be ready to close in 20 days out of a 30-day closing. Tip number 5, I think, HUD signs the closing package first, okay? So you do not sign the closing package. Once HUD has approved it, they're gonna sign the closing package. The proceeds have to be with the title company for the down payment and or closing cost, and then the borrower is allowed to sign. Make sure that the lender verifies all of your funds to close, because a lot of times during a qualification, there may be, hey, I'm waiting for a gift, or I'm waiting to cash out my 401k, or I'm waiting for my next 2 paychecks to come in order to, get to that point where I have enough money to close. So you have to make sure that you have all the funds in there prior to closing to accommodate for the 10 days that HUD reviews the package and signs the package. And here's the biggest tip of all. Whenever you're buying a foreclosed property, you're typically buying a property from a person or an entity, and the people that used to live in the property probably had a hard time paying the mortgage payment along with all the other bills that come along with it. So, i.e. the taxes, there may be some liens on the property, there may be some utilities that have to be paid off. And that typically causes a lot of closing delays and clearing title, okay? So working with a title company that works with the HUD closings is really important. So you may want to consider working with the seller, HUD's title company, because they'll work, adamantly and probably a lot faster at clearing it if they have both sides of the closing. But just know that as a buyer, at the beginning of the process, you really need to know all these challenges that are potentially going to be faced, just to take care of the scheduling of your moving trucks, the scheduling of your lock and how long that's for. So on a 30-day lock, I would probably recommend a 45-day lock. And one of the great things about working with a wholesale lender like me is that we have specific day locks. So I could lock you in for 22 days if that's what's needed, right? And then just be prepared for those lock fees, the lock extension fees, any rate changes, Because if you do not extend your lock before the lock expires, you have to be priced back to the market. And that's not a really good predicament to be in, especially in this rising rate environment. Work with your lender. Hopefully it's a wholesale lender and it's not a retail lender that charges a bunch of fees, because you're already gonna have to pay a bunch of fees in this rising rate environment. Why not work with a wholesale lender who can offer you the wholesale rate advantage without all the extra middle level management fees and everything else that has to be paid out? Follow me on social media, because I do offer a lot of great content in regards to the advantages of wholesale versus retail. And, you know, comment below, like our video, give me a call. My name is David Zai. I can be reached at 757-478-8493. I work for the world's largest wholesale broker, so we have a lot of different options, and let us shop for you. All right, bye.